Hello, welcome to a Thursday Business News Report. It's now time to bring a feature on the show today as we focus on the banking sector. Financial institutions have been issued a new directive by the Central Bank of Nigeria as the Apex Bank extends its clampdown on bad debtors beyond deposit money banks. The CBN directed other financial institutions to implement the credit risk management system to forestall the threat of bad debtors to the financial system in the country. Now, the decision was taken as non-performing loans increase in the banking sector following the COVID-19 pandemic. The non-performing loans had risen to 6.3% as of March 2021, staying above the 5% prudential requirement of the Central Bank of Nigeria. Part of the implementation will compel development finance institutions, microfinance banks, primary mortgage banks and other financial institutions to report all credit facilities, including principal and interest, to the CRMs. They are also expected to update the system on a monthly basis as the financial regulator will monitor the exercise to ensure compliance. The CBN is introducing the system due to its success in commercial banks over the years and much more. Joining me now via Skype to discuss this development and much more, I have Olusegun Elemo, Public Finance and Policy Analyst. Good to have you on the Breakfast Show this morning.
Thank you for having me.
Now, the need to prevent predatory borrowers from undermining the banking system is critical. Likewise, also meeting the non-performing loan rate that the CBN is projecting at 5%. We're still about 6.3%. Not so bad, but going by the current economic climb that we have going on, do you think this clampdown is a harsh move, understanding that businesses are barely surviving and cannot necessarily pay back their loans in good time?
Yeah, thank you for that question. I think we would ordinarily think that it is harsh because on one side we're just coming out from the pandemic, and the vaccination is still, the rollout is still graduating. And then on the other side is that during the pandemic, the Nigerian economy went into recession, and recovery in that area is slowly moving. So we think it's harsh, with those parameters. But this is one key reform that should actually have been put in place pre-pandemic, and I want to really congratulate CBN for putting this in place now, irrespective of what the state of the economy and the state of businesses are today. It is important that we know what is going out in terms of credit facilities, whether to corporate entities or individuals. And I think putting the credit risk management system in place now will put a stop to having borrowers moving from one
bank to the other,
lender to another without any database to support what they are owing. Actually.
And this also alludes to the bank verification number as well as the national identification numbers as well that we are having coming into bear, using data to sanitize the market. Your thoughts on these developments?
I think that's fantastic. When CBN, government agencies or independent institutions of government, or when they do things properly, it is important to commend them. And we had of course spoken about the ban on cryptocurrency by central bank and all that. But with regards to the CRMS now, it's a good move, and then putting BVN behind it and tax identification number, it's fantastic. So that we will then have unique identification for all the borrowers, where they are, who they are, and then we know what it is they are owing. And the truth is, for instance, when you look at Q3 2020, NPL, for instance, had risen to about 1.1 trillion. Which you said earlier is about 6.3%. It's a huge jump when you look at the entire credit facility that has gone out from financial institutions, and oil and gas alone representing about 11.3%. It appears that this idea that we are stuck with oil and financial institutions need to do the hard work. And that's why, fintech is moving fast, and, they're doing, so much competition now with, the DFIs and, and fintech. But what I believe is that financial institutions need to do the hard work, not just, lending money to, oil and gas operators, and just, putting your, finances in high risk ventures. And that's what has led to this issue of having high rates of, or high ratio of non-performing loans. And other things that I believe may have also contributed to, NPL ratio going up is this issue of, interest rate. And what we've also said to CBN is that we need to do something about the interest rate. We also need to look at GDP, for instance. You look at GDP in 2019 and look at it in 2020, there's a downward trend. And this will also contribute to, non-performing loans, rising. And then, of course, this poor credit appraiser. And I believe that, this credit risk management system now will now provide the opportunity to appraise, the credit facilities that has gone out to people. Then also the issue about inflation at 17%. Then, of course, unemployment now at 3%. You see, all of these things are issues that contribute to non-performing loans, and we need to look at it holistically and see how to address it.
Do you think we're going to have a further spike by year-end 2021 in terms of non-performing loan rates, or you think we are gradually going to inch closer to the 5% threshold on the back of vaccine deployment and also recovery in the markets? Things are gradually looking up, going back to pre-pandemic levels. Do you think we'll have a dip or a spike?
I think that if we are able to, increase vaccine rollout, particularly in Nigeria, and then we also, the government is able to, cushion the effect of fiscal pressure on the economy, and then CBN, like it said, is able to monitor compliance with disclosures to the CRMS. I think there might be a downward, trend, and then perhaps maybe come to that threshold of 5% that CBN said. But if even if vaccine, rollout increases, and then government is able to provide fiscal stimulus and all of that to businesses, but CBN does not monitor and ensure compliance, with disclosures by financial institutions, then we'll still have a situation where the system is shortchanged, and financial institutions will continue to lend money out, to high risk ventures, thereby, scaling up, non-performing loans, and it's not good, for the banking sector.
And let's also wrap our conversation now. We have members of the society who categorize among the higher cadre in terms of the volume of investments they have access to, and then the volume of loans they also require. Now, at the end of the day, there still remains some sort of electric fish phenomenon, ill phenomenon, where you cannot necessarily pin them down in terms of repayment of loans, areas around tax evasion, and much more. Now, these are revenue leakages that the government has to deal with. These are leakages that financial institutions have to deal with. The bigger economy at large has to deal with this menace. What do you think we should be doing right as well going forward beyond the BVN checkmating and regulatory efforts?
Well, I think that all relevant government institutions need to work hand in hand, and I believe that the CRMS now, for instance, will provide that unified access to all key government agencies to be able to monitor tax remittance, monitor loan repayment, monitor credit facilities going out, and all of that. And then also, for me, it's also that the key stakeholders in the financial services sector, are able to access relevant data that whether in terms of recovery, debt, or monitoring tax remittance, or all of these things. And I believe that the CRMS will be a very good tool, infrastructure to enabling that. But it is important to state that of all the non-performing loans, we need to know how much of these loans have gone to, or where maybe the whole credit facilities has gone out. How much of this credit facility has gone to MSMEs? Because that is what we need to focus on if you really need to grow the economy. If we are just focusing on operators in the oil and gas sector, and we're not looking at MSMEs and putting providing credit facilities to them, I think it doesn't show much seriousness on our part, and of course on the part of the regulatory agency, which is the central bank.
Definitely, MSMEs remain the engine of growth, and if we want to take our recovery seriously, we have to invest as much as possible and also see increased level of access to credit within that sector of the economy, and also looking at emerging sectors as well. We just have to assist as much as possible and also ensure that we have credit facilities reach them, because that's the core of the economy and we must get things right. Thank you very much for your time on the Breakfast Show this morning. Olusegun Elemo, it's been a pleasure speaking with you.
Thank you for having me.